Today we're taking a look at ASX listed stock Carnaby Resources, ticker CNB, performing some technical analysis and making some predictions on where we can expect to see Carnaby go in the near future. Let's get into it. How's it going, guys? Ryan here and welcome back to another ASX stock analysis video. Today we're taking a look at an Australian company called Carnaby Resources. Their ticker on the ASX is CNB and they are another mining explorer. Currently their focus is in Queensland at their Great Duchess project, which is based in Mount Isa. And they are targeting copper gold, and you may have recently seen them on Hot Copper or other stock forums or even on Twitter and social media, purely because they have just hit a decent resource, and this is a copper gold resource. So initially they discovered it back in December when they got their main drill results back, and since that point they've continued to deliver and more results have returned similar results. So of course the stock has been running off that. We all know gold and copper are always going to be very, very hot commodities and are significantly in demand at this point in time. So if you are interested in investing in a mining explorer, I do recommend you do check out CNB on the ASX. But today simply all we are doing is performing some technical analysis and making some predictions on where we can expect to see CNB go in the near future. So without any further ado, let's jump straight into today's analysis. Welcome into the CNB chart, guys, and as you can see there has been plenty going on at this point in time. Back in December when we started to see all the relatively positive announcements, we saw a huge breakout. We have had many gaps form as a result of that. We've got a gap all the way down here, which in my opinion, runaway gap, will not close. We've got a gap down here as well. I believe that is relatively similar as well. I don't think that is going to close, but some gaps which I think we are going to see close is this one, which we actually already did see close back when the price consolidated. As you can see, it certainly closed there on the 27th and probably the 25th of January, but we do have another little gap over here on the 3rd of February. That is when we hit a high on that day of $1.45, and we got up to the next day over here, as you can see, and formed a gap, and we hit a low on that day of $1.53, and that is right now. That is exactly what we are looking at. So all in all, this gap eliminated. Let's delete that. It's not relevant. This gap's in effect, this gap's in effect, and this gap's in effect. These two, not really too much of a major concern for us at this point in time. The one we'll be focusing on is this one because it is so close to the price action at this point in time. For those of you who aren't looking at the screen, we are sitting currently at $2.03 in value. We had a massive day. As I said, the low of today was $1.53. So basically we saw about a 30% increase in price. So really, really good stuff there. Congratulations to all the investors. You've had a insane run over the past month or two, which is great. One thing I noticed is we are probably going to have repeating patterns. I always like to look for them. So what we have here is, of course, we saw a flag pattern in the past that put in place right there, and then of course we broke in an upwards direction. We then saw something similar occur with the channel moving downwards before then an eventual breakout in the right direction, albeit a bit slower. This time I think we are seeing a repeat of that flag pattern occur. I'm going to suggest from about here going up to here. I don't think we're going to see this go really too much higher. I think it's time for this to cool off a bit. So I'm going to basically put in place my prediction right here being we're going to see a bit of consolidation in this sort of a manner, right about, I'd suggest maybe there, as you can see. So we're going to consolidate, and we've got the top end of our range just on the next trading day, which is, I believe, the 7th of February. Top end is sitting at $1.99. Then the next little bit, our bottom bit, is sitting at $1.81. So I think we're going to start trending in this sort of a direction, because the jump we saw today was absolutely massive, and as we all know, what goes up this quickly must come down just as, if not even more hard. So just wait for it. I expect there to be a lot of traders who are involved in this stock at this point in time, and I can foresee a little bit of a dump occurring if they are trying to take profits. Now, another key point I want to put in place, horizontal support, sitting at about $1.61. I'm going to put that in place there. You can see all the price action across the board that has happened there. You know what? I'm going to actually reduce that even to about $1.60 because we've seen so many opens and closes on that point. I think it's even more significant. So $1.60 is probably going to be our key point of horizontal support. So I expect the price action will trend towards that and then eventually break in an upwards direction. Or alternatively, if we do see lots and lots of traders jumping out, we might see something like this occur. The gap gets closed and then we jump straight back up into this little bit of a trend, but that is to be seen at this point in time. A chart that is moving like this pretty erratically is quite hard to chart, especially when you don't have too much historical data to obviously go off. We are way above that point right now. So all in all, looking relatively strong, of course, but we are I'd say pretty overcooked. And we'll see that in the RSI if we jump into that one as well. Let's grab that up. You can see we are back in the overbought range at 72.83 on the RSI. So it needs to cool off. That's why I'm expecting, it's going to cool off in a downwards direction like that, or even potentially close that gap. Pretty self-explanatory there. Let's have a look at the MACD as well. Bring that one up. And you can see, interestingly enough, the MACD looks like it's about to cross. The cross hasn't occurred yet. We're having our red period, and now we're about to see a cross. That is quite interesting because you would have thought that a jump in a candle of this magnitude from a price perspective, but also from a volume perspective, would have resulted in MACD crossing a lot quicker than that. And we even have, had a period where we've not been going downwards, but been trending sideways, and if not a bit upwards, more so than sideways. So I am surprised that these lines are not a bit closer and we haven't seen a cross yet. Maybe this cross will be a signal for us to keep trending upwards. I don't know, but realistically, I think we have seen probably either the start of an absolutely insane run, or alternatively, we have seen it jump a bit too high. Traders are going to jump out and it's a bit too overcooked. Best case scenario, we keep going up. We did, close basically on an all-time high today, and we continue moving, maybe see a candle of that size again. That would be best case scenario, and I'd probably say it's time to jump out if that's the case, because it has gone crazy. Or we are going to see that this gap is closed, although based on what we have seen in the past, runaway gaps have not been closing at all. We only saw a big one close there after a bit of consolidation. Not too sure on this one. This is a very hard one to pinpoint, but if I was being conservative, I'd say we're going to see a bit of a drop now occur and probably a trend towards this $1.60 point. But I hope I'm wrong, and I hope it continues in an upwards direction all the way up to $2.50, $3. That wraps up today's analysis on CNB, guys. I'd love to hear your thoughts down in the comments section below. Of course, if you did enjoy today's analysis, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.